subscribe to our YouTube channel VanFin Multibaggers and press the bell icon to see the latest updates and videos. VanFin, discover opportunities, create wealth.
Logistics companies have been in focus since the implementation of GST. Joining us now is Prakash Tulsiani, the ED and CEO at Allcargo Logistics. Also joining in is Samit Sarkar from the research team. Over to you, Samit.
Thank you, Shraddha. Welcome to Bloomberg, Mr. Tulsiani. So my first question to you, your MTO segment. In the third quarter, the realizations were weak, but the volume growth was good. So what is the kind of growth that one can expect on both the fronts for MTO segment?
In MTO business, we are world's number one player. Our growth has been outstripping the market. The market is the world trade market. The world trade has been growing approximately at 3 to 3.5%, while we have been growing upwards of 10%. In our business of MTO, we have two segments of offering. One is the LCL business, the other one is the full container load. So it's a mix of both of these businesses. LCL being the mainstay, obviously that is what we started with, and FCL now developing even more. So that's the reason you see the combination of both of them, because LCL is where we have the value-added services. In the full container loads, we do services which could be door-to-door or it could be port-to-port. So that's why the margins will differ a bit.
So what is your outlook on the CFS division with direct port delivery scheme coming in at JNPT port and with Mundra lease ending?
In our CFS business, we are in India amongst the players which is present in 83% of India's container volumes. No other player in India is present in all the 4 locations where we are. That is Mumbai, Chennai, Mundra and now Kolkata. So we are the only player which is the largest player and which is present in all the 4 locations. Yes, DPD is there, which is for the ease of doing business. We support it. In fact, in one of our facilities, we have a yard for delivering cargo which is cleared at the port, stored at our CFS and then delivered to our customer. So we offer services to all segments of businesses, whether it is DPD, whether they require CFS or whether they require even storage of cargo in warehouses. So definitely that is a new business segment which has opened and we are participating in that. As far as CWC warehouse, which you referred to in Mundra, we have discontinued the lease after a year, and that was the period that was required for 1 year of operations. We found that it is better that we operate in our own facility which we have. So we continue to be present in Mundra in our own facility.
So do you expect your profitability to improve for the CFS division given the fact that Mundra lease has come to an end now?
Of course, certainly, because the Mundra facility which we had on lease was not delivering the right ROCE or profitability, and that's why we have exited it. We continue to remain positive because we will be developing logistics parks as we go into the future. We have already commenced on 2 of our facilities where we have the land bank, and we own these properties or the land for some years now, and we're going to develop that. And once that development takes place, then certainly we'll see a lot more activity there. We're also looking at multimodal logistics park, and one of them would be Jajjar over a period of time. Once we have the rail connectivity and all the approvals in place, we will see the growth coming in the CFS division also. We have changed our service offerings and we are now offering DPD, CFS, third-party CFS, whatever is the need of the client. So we remain positive on this sector also.
So your PS division has been a drag on your financials. How do you plan to turn around this segment?
What we see in India is today the infrastructure development, number 1. Number 2, a lot of investments coming in, whether it is from the government or the private bodies. That investment cycle has picked up. Not only that, the consumption cycle or the consumption demand in India remains very strong. And for that, we will need a lot more activity on project logistics and engineering solutions. So in our project logistics, our order book is very healthy. We see that because there is a lot of investments being made, there are a lot of plants coming in, there are refurbishment of cement plants or fertilizer units, and for that the project logistics is seeing a lot of traction. The order book is very, very healthy right now. In terms of engineering solutions, yes, because of the demand from the lot of industries where they are setting up their plants or refurbishing it, there will be requirement for equipment which is much needed if there is any refurbishment or new plants coming in. So we see traction there also. Yes, there was a dip in the last few quarters as far as engineering solutions are concerned. The leasing activity was at a low, but I think we have hit the low and now we will see the upward trend coming in the coming quarters.
So what is your outlook on the contract logistics space, and how much do you plan to invest in this division?
Contract logistics is a place or a field where we will see highest growth. There is clearly, because of the GST in place now, because of the consumption drive in India, there is a clear focus from the companies, those who are manufacturing or traders, that they want to focus on their core activity and they want to outsource the logistics activity to a credible player, a professional player, and we participate as Avashya CCI in that particular segment, and there we will see a lot of growth coming in. I expect that the growth should be upwards of 20 to 25% in the coming years, and this is the area where our clear focus and a lot of energy is been given to ensure that we don't only grow organically, and if there are opportunities for M&As, we also look at that.
So you have planned a capital expenditure of close to 700 crore rupees. So can you give us a breakup of how and where you're going to use these funds?
We have always a Capex plan because we have these businesses that we need to develop. Whether it is M&A, whether it is acquisition of land or development of already land parcels we have. So this will be over a period of time. It will come in over a period of 3 to 5 years. And the plan is to look at multimodal logistics park, look at M&A's possibilities, if any, and look at even technological developments which will enable our businesses to become far more efficient. So these are the areas where we will be looking at investing in the future.
So how much have you kept aside for acquisitions, and have you planned any acquisitions for the calendar year 2018?
See, we are always in a state of readiness. We are always on a lookout for increasing the business because most of our businesses of scale. We need to add that scale to get the efficiency and better profitability. So to answer that, do we have any targets? Yes, we are. These are floating targets. What I mean is not concluded or closed, but we are examining, and only if there's a strategic fit and at the right cost, we shall go and look at these M&As.
You're also planning to triple your warehousing space. So have you listed out any areas that you will be targeting for?
See, complete India, of course, the geography is where the demand is. Now, we always are in constant contact with our customers who tell us where they would like to grow. So clearly, Hyderabad and Bangalore have been identified. The number 3 area would be also in the NCR in Jajjar. But we continue to observe how is the infrastructure development happening. Clearly, one of the areas would be the dedicated rail freight corridor, which is an area where we will focus and see where are the setups coming up in terms of states which are enabling the industrial development clusters, and along with that we will see whether there is a need for logistics parks that we have planned, and then go ahead. So 3 areas are very clear. The others will depend on what the development plan of each of the state or the government